If you're new to the channel, I'm a top author on the TradingView platform, and every single day I share a lot of free education and analysis. And in this video, what we will be doing is performing a full analysis on a pair from a swing trading perspective to see what kind of opportunities we can actually be looking for on the pair. And obviously we will perform this analysis both from a technical and in order flow perspective, and by using the combination of these two different analyses, we will be able to understand exactly where is the next big opportunity on the pair. Okay, so let's make a full breakdown of the situation that we currently have on AUD USD. Now, why do I want to speak specifically about AUD USD? First of all, because the market is very near to providing to us a very good trading opportunity from a swing trading perspective this week that is coming. And also because the analysis that you will see on the pair is very educational, so that I can teach you some very important concepts. So the first thing that we will be doing is looking at the market from a technical perspective. Obviously checking the monthly, weekly, and daily timeframes. We will then go and see what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. And obviously if you're able to understand what hedge funds are doing, you are also able to have an edge in the market over your competition by trading in their same direction. So that is what we will be also doing, checking the order flow here for AUD USD. And then we will see what kind of opportunity we can be looking for on the 4-hour time frame, because as usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So let's start our full analysis. Now, starting from the monthly, what we can see. On the monthly, we can see that the market has created a very strong impulse to the upside that also created a higher high. In fact, we had a high here, which the market broke with this move to the upside. And after the market creates a higher high, what do you expect? You expect the market to give you a retracement. And this retracement currently has already tested the previous resistance, which is now turned support. In fact, all this level here was previous resistance, which after the market broke it to the upside was turned and is turned support here. The market already tested it and rejected it to the upside. And we can expect the market to go for a deeper test of this area before creating the continuation to the upside. So on the monthly, we can expect a deeper test, considering that the market didn't even retrace to the 0.382 Fibonacci retracement, obviously. Because in general, if you want informations on a retracement in the market, you have to take your Fibonacci from the low to the high of the impulse, which in this case, we see that is here, which means that the market has the possibility, it is not confirmed because the market is still here, but we have the possibility to actually break this support to the downside and go and test the 0.382, which is lining up with the support that we had here, for the market to start a move to the upside from this support level instead of the support level that we have here. It's obviously a possibility. However, it is for sure that we have good probabilities of seeing the market creating a deeper test of this support. Going down on the weekly, what do we see? So from a weekly perspective, unfortunately, the situation is quite different. Why it is different? Because we have a market that has created an overextended M formation. Now, after an overextended M formation, what do you want to see? You want to see the market give you a move to the upside. Specifically, you want to see the market reach the neckline of the formation, which is the area of previous support, which is now term resistance. So we expected from here the market to create this move to the upside, which is exactly what the market has just done. And the market has also already completed the pattern at this previous support, now term resistance. Now a deeper test of this resistance is also possible before the rejection to the downside. However, as usual, we have to be extra cautious, and let's go down on the daily to see what we actually have from a daily perspective. Now on the daily, this is where the situation starts to become very, very interesting. Now in our previous analysis on AUD USD, what did we say? Now in our previous analysis, we spoke about AUD USD exactly when the market was here. And in this previous analysis, I explained to you guys all the reasons for which from here we wanted to see this move to the upside to go and obviously complete the weekly pattern that was the overextended information, and basically we wanted to see the market create this move to the upside, which is exactly what the market has done. And the market tested just now our target to the upside that we had in that previous analysis, which I identified at this previous support, now term resistance. And I will link in the description of this video this previous analysis in which I explain all the reasons for which we wanted to see this move to the upside, so you can go and check it out for further reference and more free education. And if you capitalized on this move to the upside following my analysis, then great job. If you didn't, or anyway, if you want to be looking for the next opportunity for AUD USD, what do we have to be looking for and what do we have to consider in our analysis? Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Well, keep going. What we can see that from a daily perspective, we are currently testing exactly the previous support, which is now term resistance, which is obviously a strong supply area for this market, from which we can definitely expect the market to give us a rejection to the downside. We also have a nice impulse and correction. Now, if we want informations on the correction, what do we have to do? We have to take our Fibonacci from the high to the low of the impulse. And we can see that the market has just tested the 0.618 Fibonacci retracement, which is the golden ratio. So we have a market that just retraced to the golden ratio, from which we can definitely expect the continuation to the downside. We also have this candle here with the long wick, which is obviously the candle that the next one is supposed to fill in the wick, this red candle here. This is a pattern that we see very often, in which you have a market that creates a red candle that has a wick which is more than the size of the body. I also made a YouTube video just about this pattern. And why it is a very important pattern? Because very often the next candle will fill in this wick. So we can expect Monday to be bearish. Would it be bearish? Obviously, we have no idea, but we have good probabilities, and trading obviously is a game of probabilities and risk to reward. So we have good probabilities to see the market on Monday start the move to the downside. Now, before I show you how we will be approaching this kind of situation with students, let's first go and give a quick check at what we have from a COT perspective, which is obviously the commitment of traders, so what hedge funds are doing in the market. Now, what we can see with the last report is that hedge funds closed 6.8k long positions and opened 500 shorts. So during this retracement, what hedge funds have been doing is shorting AUD USD and closing the longs that they had. So definitely they expect a continuation to the downside as well. And we can see that net positions decreased from 16k to 8.9k, so almost cut in half the net positions, bringing the longs at 53k and shorts at 44k. With obviously a long exposure of 41%, which is obviously decreased from our previous report that was 45%, and the short exposure that went from 33.3 to 34.9%. So definitely we have a bearish AUD USD from a COT perspective. And one thing that I didn't say, why did we check the data only for the AUD? Because all currencies on the spot are traded against the USD. So if you're checking the data for the AUD, you are already checking AUD USD. So what we checked is exactly AUD USD. Now, as I was saying earlier in the video, the monthly, weekly, and daily timeframes are the best timeframes when it comes to the direction of the market. But the best time frame for entry is the 4 hours. And at the moment, from a 4-hour perspective, what do we have? We have a market that, even though has kind of bearish structure, is still in a very strong bullish environment. So can we be looking for a short position yet? Obviously not, because if the market will remain in this kind of environment, the market can easily continue to the upside and go for a deeper test of the weekly resistance, exactly as we have seen on the weekly time frame. So what we will be doing with students? Well, as usual, we will be reactive in the market and not predictive. Even though we want to see the market continue with the move to the downside, we obviously will not be looking immediately for the short. What we will be doing is, inside of this area, we will be monitoring price action from a 4-hour perspective, waiting for the market to shift from a bullish environment as it is right now to a bearish environment. And only if the market will shift from a bullish to a bearish market, only at that point we will add AUD USD to our watch list and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for this continuation to the downside and creation of this impulse, correction and impulse pattern to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profits, as well as having me answering personally every question that you have every single day. So I really suggest you go and check out the program. The link is in the description, and I will see you in.